it is. Then moving to the next adjustment. Interest on the bank overdraft. 2,800 included in the bank charges. So what do? We must check for our bank charges. From the information that we have, here is our bank charges. From this information that we have, we must be having bank charges. Bank charges of how much? 31,000. So what we do, we must take this bank charges of 31,000 into the answer sheet. Here is our answer sheet. Bank charges 31,000. So we're told that interest on the bank overdraft is included there. So what should we do? We should exclude it because it's not part of the expenses of the bank charges. So it means you must say minus the 2,800. Then we'll be having how much? 31,000 minus 2,800 equals to 28,200. So this is the one that you're going to record here. 28,200. It means the total bank charges was only 28,200. So we move to the next adjustment. Remember this 2,800 must be included under interest expenses. Where does interest expenses comes? It just comes after the profit before interest expenses. You must include here the interest expenses. Interest expenses. We have that 2,800. Then we're moving. The next transaction. The next adjustment says, no entries have been made for the stock stolen at the beginning of June 2013. The insurance company has informed the Selati Ltd that they have transferred the 32,000 into the business bank account in respect of the insurance claim. Selati Ltd bears 20% of any stock loss. So let's check from the additional information that we have. What is it that we need there? The stock, here we have in the trading stock. Can we use this one? No, we can't use this one because the whole stock it's not that the whole stock was stolen. So what do? We're moving to this other side. The stock loss, we must record it here. Under the expenses, it's not recorded. So we say loss stock due to theft. Open bracket. So what should we do when we get here? We're saying no entries has been made to this at the beginning of June 2013. So it means there was no entry that has been made. The answer sheet was supposed to have this 40,000. There was 40,000, and then this was supposed to be under the answer sheet. It's just that I've taken the wrong answer sheet. Then we must subtract this 32,000 that is here, because it was given the amount of stock that was stolen was amounting to 40,000. Hence I'm having 40,000 here. So we must subtract the amount that was paid by the insurance in our company, the compensated amount of 32,000, so that we can see how much actually we have lost. So 40,000 minus 32,000, it goes 40,000 minus 32,000, then we'll be having 8,000. Then we're moving. The next transaction. A physical stock takeoff on 30th June 2013 reflects that the stock on the value of 1,475,500 was sold on hand. That means it's our trading stock. Trading stock. deficit. Because, why do I say deficit? Because we must come here and check. Here it was 1,500,000. But in here, it is 1,400,000. It means it is shorting. Deficit meaning it is shorting. So we're coming back, we're saying from our information, the trading stock deficit, we are going to have 1 million, this 1 million that we have here, 1,534,000. 1,534,000, and then we must subtract this stock that was stolen, the 40,000 stock that was stolen. We must subtract it because remember this was the stock that we had in hand, at the beginning. Then we must subtract the one that was stolen because it was stolen during the year. So again, we must subtract the one that is on hand after that, minus on hand, this one that comes here, the physical stock taking, it is the stock on hand. Reflects that to the value, the value of 1,477,000 was on hand. So it means we are having it now. So we must subtract the 1,475,000. 500. How much will we be having there? We are having 1,534,000 minus 40,000 of the stolen stock, minus 1,475,500 of stock on hand. That means we'll be having how much? 18,500. 18,500. If you want, you can add these two together and just write the stock loss or stock deficit with the amount of 26,500. That is the other thing that you can do. You can add these two and make them one transaction or on one line and then have the total of 26,500. Remember, the brackets or the numbers in brackets are helping a lot because they are used, remember, or they are fruitful for you because when we mark, we include the marks that are in the bracket. You can even add wrong at the end here, but once there are correct amounts in the brackets, you'll be scoring marks. Then moving to the next transaction. The next transaction is the amount of 1,700 received from M. Ponani had been credited to the debtors control account in June 2013. The account of Ponani was written off as a bad debt during May 2013. So it takes us where? To the bad debts recovered. We must first of all start with bad debts recovered. So bad debts recovered, it is an income because you have recovered that money. It comes as your other incomes. Bad debts recovered. Bad debts recovered. How much did we cover? The amount of 1,700 was received. So it is an income. 1,700.